Okay, this is a quick update on the reversals that we've traded with the euro and the pound. So right now we're looking at the daily time frame. This is euro futures. You can see the volume clip down here. I'm going to refer to this in just a moment and explain exactly what's going on here. And before I go on, though, please understand this is not a trade recommendation. I'm not telling anybody to buy or sell euro or pound. This is just educational purposes only. This is just the way that I'm analyzing the charts. This is my technical analysis on the currencies that we're trading over the past 24 hours or so. And I want to go to the fact that at the end of the day, when we do our homework in the coaching program, it's critical that you pay attention to the daily timeframes as well, even if you're going to, day trade for the following day. Now, keep in mind though that on certain days, you're going to do your homework. You're going to take a look at the, closing prices and the candles or the bars, depending on what your preference is, and you're going to notice that sometimes it's not really giving you any information. And it could be, let's say price is in, a downtrend and it's sort of in the middle of that downtrend, or in an uptrend and it's in the middle, or it's just kind of choppy and moving sideways. And you just don't have enough data to make a decision. It's not really touching a significant level of resistance or support. At some point in time, though, it is going to. And if it's not giving you any information at that time when you do your homework at the end of the day, it may be that that currency, that market, that instrument, that commodity, stock, whatever it is that you're looking at, it might not be the right time for it. It's not possible that every single time you open up a chart that you're going to find a trade relative to the time frame you're looking at. Sometimes you're going to have to wait a little while for it to unfold and to make sense according to the way you look at the charts, how you trade, and the amount of experience that you have up to that point. So just keep that in the back of your mind, that if you don't see anything that makes any sense, don't force it. Don't start looking at, let's say you've got a favorite currency or a favorite stock or a favorite commodity, and you don't want to do anything else but trade just that one and on that time frame. You pick one time frame and you start forcing it. That was one of the biggest mistakes that I made, is I started forcing trades because I didn't want to accept these concepts that if whatever it was that I was looking at was not lining up, maybe because of the time frame that I was looking at, wasn't, the market wasn't trading off of that time frame, or it just wasn't ready yet. Whatever it was that I was looking at, whatever I was trading, wasn't ready. It wasn't at a specific level where it was going to give me a better point of entry. You're looking for better points of entry. You're here to make money. You're not here to see if you can, gamble your way into some profitability. That's just not the way to stay in this business consistently. You're looking for very specific turning points and trade opportunities to trade with the smart money. You're minimizing the possibility of having a failed trade and being on the wrong side. So you're going to have to wait. It's going to take some waiting, and you have to understand the process as to why you're waiting. So if there's, we talk about it quite a bit with accumulation or distribution. If we're watching smart money acquire or distribute throughout that process of consolidation, that whole process is going to take some time. They can't do it instantly with just one single trade and then you're going to get an opportunity. It's not going to work like that. And that's what creates some of these tops that take quite a bit of time to develop. And it's all relative to the time frame that you're looking at. So just, again, keep that in the back of your mind, that you may have to look somewhere else in another market. Maybe go look at the indices if you want to trade the indices, if you're able to do that with your platform, or maybe a commodity, or just another currency pair. So you can see that it was in a range here. This is, again, the euro daily time frame. You can see that it was sort of in a range right here. It looked like it was topping out. It pulled back down and then rolled right back up again. So there was quite a bit of buying, even though that was a bearish candle. And then we had yesterday's candle run right into this daily resistance. So a lot of people missed this because they were trading it on a smaller time frame, and they weren't aware that this was actually a very key critical level of resistance. So this was that stopping action, that buying climax right here. And this takes us all the way back to December 3rd last year. December 3rd, the euro printed this high, it stopped. It pulled back down, went into an area of reaccumulation, and then resumed its uptrend. And then it did the same thing here. And then we had these last final upthrusts that were failing. And you can see with volume diminishing, even though it was starting to try and punch right through this resistance level, it started to topple over. It started to turn over here to the downside. And then we get that strong downward candle here with more volume. You can see it's one of the strongest volume candles in about a week and a half. That right there is the January 7th daily bar. So this kind of puts us in this downtrend here, and then we go through this area of distribution, redistribution here. It starts to go sideways. We get another retest. Now, something else to think about with these tests, you see it moving lower, and then it pulls all the way back up to test a high level, and that sort of confuses traders. It used to confuse me. I would, at some point in time, start thinking, if I saw this kind of behavior, that maybe it was like a Fibonacci retracement level from the up move prior over here to the left, and then it was bouncing off of that level, and then I started thinking I could go long and the uptrend was going to resume. And that's not the case. So if you're counting the waves inside of these price swings here, along with volume, the way I teach how to do that, you can do this on a 5-minute, you can do it on a 15, 30-minute, 1 hour, 4 hour, daily time frame, same thing. So if you're going to be looking for clues, you want to be counting these waves, and this is going to help you identify the fact that this is most likely just going to be a retest. It's not an opportunity to get back in on some kind of Fibonacci bounce down here, and the uptrend is going to resume, and it's going to take out the high. We see that happen quite a bit. So when I used to use the Fibonacci tool, when I first started trading, it seemed like an easy tool. I didn't have to spend too much time, educating myself on how to use the tool. Just, it's kind of like you hear them say it's more like an art than a science. Well, when you start using an indicator and people start referring to it that way, you're probably going to run into some problems. I ran into a lot of problems always relying on the Fibonacci tool and then the Fibonacci extension for my targets. They didn't always line up. But when I start counting the waves and I use the point and figure charts, that's when I know I have a very precise entry and I have a very precise take profit that repeats and hits over and over and over again. I mean, the point figure has been proven over 100 years, so we don't have to worry about that part. And the Fibonacci tool, while it works in some instances and in certain locations, you need to know what those instances and those locations are to start applying and using that Fibonacci tool. I see people use the Fibonacci tool everywhere on everything, every price swing, and they're just, looking for these little quick, easy little bounces. I did that for years, and I had really mixed results. Sometimes it would work, and very often it wouldn't work, and I had to use it at very precise locations and in a certain way. I don't mess around with the Fibonacci tool all that often anymore. I just wait for my point and figure to give you my entry, and it's accurate, and I have very, very, very few losing trades as a result of this combination of counting the waves, paying attention, and tracking the footprint of smart money. Here was a very perfect opportunity to see you can see here with the description here. This is what I posted here just a little while ago, and this was back yesterday. Sorry about that. So yesterday, that was the 16th. So price, we can see that price at one point on that bar, that daily bar, at one point it was a pretty bullish looking candle. It was running right up into that resistance. It stalled. So when I see this on the daily time frame, it runs right into that high that was printed here again on December 3rd, and it stopped. At that point, I can go to the 5-minute, I can go to the 30-minute or the 1 hour chart, and I was able to short the euro dollar yesterday, and I got a point and figure entry. It dropped right down and hit my target at, let's go ahead and take a look at this one here. I'll show you so my initial target was the 1.2041 area from my initial entry, and you can see the same thing. It ran right up into resistance yesterday and then dropped, and you can see this extreme bearish column here giving me that reversal. There was a couple of little entries. I'm a little conservative, so I look for a second entry opportunity and wait for tests. As I mentioned, there's tests along the way. So this is a relatively smaller time frame versus the daily time frame that you looked at just a moment ago. Let's go back to the daily. So again, paying attention to what's going on here, I'm also watching the spread or the range. This is a pretty decent bar. I mean, from the low to the high, that's a pretty big range for the day compared to a lot of the other daily bars. So that's also a clue here. And then noticing where it closes. So it runs up as a bullish candle initially earlier in the day and then ends up closing as a bearish candle with a lot more volume coming right back in. That's, again, the clues and the footprint of smart money just before it starts to make its next move to the downside. Again, it's already been in a downtrend, but this was just a retest. Retests, as I was talking about earlier, are very, very important to confirm our breakouts and our reversals and the entries with the point and figure. The point and figure is going to give me the entry and the target, and then I'll look for another target if it continues to trend lower and starts to break out. It's likely to move. We're going to see maybe a 2 or 3 day trending move, for example. Some of them continue for 7, 8, 9, 10 days. It really depends on the classification of that particular trend. But in most situations, you're going to see some kind of a trending move, and then it'll settle and it'll create another area of redistribution, which would be another range of sideways movement, just as you see it here, before it drops again, if it's going to continue in this downtrend. So the same thing happened with the pound dollar. Let's take a look at the pound dollar. This is the pound dollar. Now it ran into an area of resistance, but it's a little bit different. I'm going to back this up in just a moment so you can see this channel and where it comes from. But again, price stopped right at the upper channel line right there, technically. Again, last week it was sort of bouncing around. It really wasn't too close to that resistance level. There really weren't significant old highs on the daily time frame that were causing an area of resistance. It was just a temporary phase before it made that last push right there. Again, smart money distributing and driving price as we see this reversal here with volume. Again, that's exactly what we were looking at with the previous chart with the euro dollar, looking at volume, watching the type of bar, the range, how is it closing? Is it closing bullish or bearish? Where is the close? Well, this was about a 50% from the low to the high. This is one of the areas that I would use my Fibonacci tool. I would just draw the tool on the bottom of that daily bar to the high and then measure where it's closing. That's also a clue. It doesn't give me an entry. That I don't use the Fibonacci tool as a opportunity to find an entry or targets. I'm going to rely on my point and figure. But what I'm getting at is I'm trying to find these clues that there's going to be some kind of a reversal, that there's some kind of change. There was a lot of effort here at some point. You can see by the size of that volume bar, that histogram bar, you can see that there was a lot of effort to try to drive price in and through that resistance level, and it just couldn't do it. So it ended up closing 50% of the length of that candle, that bar, that daily bar. And then we see this volume. This is very, very typical. We see this kind of activity. People think that a lot of inexperienced people that aren't paying attention to this and don't know how to count these waves, don't know how to track the footprint of smart money. What they're doing is they're expecting that it's likely to continue higher. There's the fear of missing out. They don't know how far to hold on to the trades, how long to hold on to those trades. They don't know how to calculate their take profit levels. So they're just jumping in, trying to scalp, and you get that activity where you see a lot of urgency to a certain degree, and it runs right into that resistance. They're not aware of other areas of resistance and where it's likely to stop. And then the whole thing reverses. A lot of inexperienced traders get stuck in these head fakes where it starts to look like it's breaking out to the upside, and then the whole thing rolls right over again. You can see, again, another perfect opportunity. So we're going to pay attention to this close here today. It's not, obviously the market's not closed on this for this time frame at this point. We don't have that daily bar close yet. So what we're going to do is come back here, pay attention to and notice where it closes in relation to the high and the low for this day. Again, this is the 17th of February. And then that might give us an opportunity to continue looking for sell opportunities. Again, I'm not recommending that anybody buy or sell euro or pound. That this is just educational purposes only. We don't have confirmation just yet. I have no idea how that candle's going to close yet. However, I was able to take a couple of trades with the pound dollar on my point and figure on an intraday basis as a result of what I see here. Again, notice the increase in volume, but no result versus the amount of effort and the poor close right there at about the 50% mark. So let me go ahead and back this up, and you can see where all of this comes from. So I'm going to do it one more time. This is, again, the pound. You can see here's the COVID drop here through March, and then the bounce through April, sideways consolidation. Here it starts to form this channel. Again, we would expect in certain situations that price is likely to break and exceed some of these boundaries of resistance and support. That's okay. I'm going to leave the channel here exactly where it is because it still lines up, and it's telling me that this is the confined range based on the initial price action. I should leave it alone. A lot of times I see people making adjustments to their trend lines, and they're incorporating the new highs as it continues to advance. And the issue with that, and I used to make that same mistake, the problem with that is that if I would have changed this trend line here and started adjusting it to that high here, that high is September 1st last year, if I would have adjusted that, it wouldn't have given me the information that I needed here yesterday when we saw price run right into that resistance and turn around. And this is the same thing when we analyze the phases of consolidation. When we analyze the phases of consolidation, you hear me talk about this in the membership course. When we have a selling climax or a buying climax, and then we leave that resistance line in there, it's important to leave it there on the initial resistance level, even though I expect price to poke through and exceed the boundaries. These levels where it's exceeding these boundaries are also clues of exhaustion or the reversal and the divergence that I'm looking for before it reverses and comes back. And these give me trade opportunities. Here you see a spring. These are just perfect opportunities. The last couple of tests here before it resumes this uptrend, and it just repeats over and over again. So it's important that you know where to draw your resistance and support lines and where to draw your trend lines. For the most part, you're going to do okay, if you're just making slight adjustments. But you have to understand these concepts, because this is what is driving the overall activity and giving and providing certain turning points at a period in time in the future. When we start looking at daily time frames like this, you have no idea when it's actually going to run into that resistance line one more time. You can see that, again, it's clearing and moving through and above. That's okay. These are highlighted and turning points. It's sort of like the bought areas where we could possibly put on some kind of a short. It just depends. We've got to count the waves. We've got to be looking for the opportunity. It depends on if point and figure is going to give me an entry, and then I can short it. It's safer. I can see what smart money's doing at that point. I can go down to a smaller time frame, and I can execute for daily intraday trades, I should say, where I'm likely to get into the trade and out of the trade within the same trading session or within the same day. Again, I don't have confirmation just yet until this candle has closed. So at the end of the day, when this candle has closed, at that point, I'll assess the conditions and we'll do our homework again tonight. And we'll take a look at the pound to see, what kind of a signal it's giving us at that point. If we could expect it to continue to move lower, or if we would expect some kind of a, secondary test, maybe not as high and maybe not running right into that level of, the trend line there. But it may give us some kind of a retest. It just depends on where this one closes. It could close pretty strong and pretty deep and then come back up and maybe test that high from February 10th. That's a possibility. But again, this candle's still open, so I'm not going to sit here and analyze it until it's actually out of the way. So as far as intraday trades, I've already been in and out of these trades, these two trades that I've shown you here with the euro and the pound. And at this point now, I'm just waiting either for a second take profit level, because I'll scale out, or I'm done with the trade altogether if it stops me out at a break-even stop, which means I don't give anything back on the initial take profit target, the first target. So I just sit and wait for the next opportunity. It's likely, again, to go inside of a range of consolidation, which could be a range of redistribution, and then it'll break out and give me another opportunity on the point and figure, and I can short it again if this trend is going to resume to the downside on the pound.